All right, this one's gonna get you riled up. Will your credit score affect your insurance premiums? We're gonna get into that right now. Credit, oh my gosh, it's been a hot topic in the world today. It's between cybercrime and people stealing your identity and locking down your credit and trying to protect your credit as much as you can. It's a challenge sometimes to feel comfortable with your personal information being out there. But in the insurance industry, bottom line up front, there are several types of policies where credit will affect the insurance premiums. So let's get into some of those details and how it affects you. Insurance companies will run financial responsibility, credit scoring, on home and auto purchases. That's right. If you have a home insurance policy or an auto insurance policy, 9 times out of 10, the insurance company has as part of its pricing algorithm your credit history. Your relationship with debt, unfortunately, is an indicator in some way, shape, or form to what they believe your overall risk is to be a customer of their insurance company. So, how does it relate? Well, it's pretty much a indirect, I think it's indirect, probably direct too. It's a relationship. If your credit goes down, your insurance premiums go up, unfortunately. If your credit goes up, your insurance premiums go down. So I think economically that would be indirect. So they go opposite directions. But credit will affect, especially in the home insurance and auto insurance. Number 2, get a formal, finalized quote. Insurance companies are really crafty when it comes to presenting you with a quoted option for your home and auto insurance. Oftentimes they're using a baseline, a base rate, based on maybe what type of vehicle you drive, where you live, some of the basic information. But until they run that financial responsibility report that we talked about in number 1, you're not gonna get a fully accurate rate. So when you're quoting your insurance, make sure that whoever's working on that is giving you a full formalized quote that is ready to push go right now. That's the quote you wanna look at and compare to make sure you're getting the best price for the value that you need in the insurance product. So number 3, are there any insurance policies that don't look at credit? Well, yes, there are. There are plenty. In the business world, there are many insurance policies that just doesn't care about individual credit. Property coverages, or if you've got a lot of materials, if you're a builder perhaps, or something like that. Also event type policies, policies that are fast and quick, policies that are based on very small periods of time. They tend to not look at credit as much, but guarantee yourself that anytime you're looking at major purchases of vehicles, homes, and you need to get insurance on those things, they are almost always going to check that credit score to see how and where you stack up and how that affects that premium that they want to charge you. So I know that's not a good thing, it's not good news, but credit is something that insurance companies are using today. In our world, they call that rate modernization. Isn't that a lovely term? But you as a consumer should know that that's out there and realize that, hey, if you could work on that credit, that's only going to help you in other areas of your financial life. On behalf of all of us here at Callahan & Rice Insurance, thanks for watching.